Business viewers, trading is an easy business to get into. Startup costs are relatively low and it can be done from the comfort of home. The logistical ease of getting started, however, should in no way imply that becoming a profitable trader is simple as it sounds. Most, even experienced traders would attest that success depends on many factors, including hard work, research, planning, discipline, and being a lifelong student of the markets. As with many businesses, there are certain principles that, when followed, can greatly increase the chances that the trader will be successful. This is MNC Business, and you are on Economic Buzz with Forextime. In trading, as in any other professions, there are factors that one can follow to achieve success. Many analysts rightly observed mind, method, and money as the three critical success factors for successful trading. In most cases, beginners focus on analysis, but professionals operate in a three-dimensional space. They are aware of trading psychology, their own feelings, and the mass psychology of the market. Starting to trade is basically just like starting to do anything. It's easy to start but hard to keep up. The trick is that we have to make smart trading a habit, something we do naturally, easily, and without any difficulty. Now, the hard part, of course, is creating the habit and get the best strategy. What should be noted and understood in securing our trading and investment activity amid the current global economic situation? Before we discuss about Forextime analysis on this, we have a short business feature for you about smart trading strategy. And to have a deeper view about global economic analysis with Forextime, we have Jameel Ahmad as the Chief Market Analyst at Forextime Ltd or FXTM. Jameel, thank you very much for your time, and this has happened to be your very first time coming to Indonesia, so we welcome you to this show.
Thank you so much. Thank you very much for the invitation, and it's good to be in Indonesia.
Our pleasure to have you for the first time here representing FXTM and also using your area of expertise in sharing your knowledge and insight to our viewer, especially those who are starting to get interesting in terms of investing or even trading in the market. I've been wondering about this. Is it really the best timing for us, either trading for the short time or investing in the longer run, given the current global economic situation?
Well, very good question. Basically, in terms of trading, there's never a good time or a bad time. All investments carry a certain degree of risk, but what I would say to anybody who's considering the option of learning how to trade is that it does take time. It's about education. You must educate yourself on what's going on with the markets, trends, forecasts for the future, and basically I would never rush into it. Just because there's opportunities in the markets now, it doesn't mean there's not going to be opportunities in the markets in 1 year. Like if I took you back to last year, actually, there was two trends that many analysts and economists were saying that would begin to decline towards the end of the year, and I would take you through the New Zealand dollar, Aussie dollar, New Zealand dollar, and the Aussie dollar, and basically the Kiwi, which is the New Zealand US dollar pair. The New Zealand Reserve Bank of New Zealand were going to raise interest rates last year, and they raised interest rates three times in a row. This inspired some rapid demand for the New Zealand dollar, and the Kiwi approached as high as close to parity. It got to 0.99. Now, most analysts and economists knew that for an economy that's very focused on commodities and dairy milk products and agriculture, that a New Zealand dollar valued at 0.99 would not be feasible for the longer term. So this is one of the opportunities in the markets last year, and since then the New Zealand dollar has actually fallen to about 0.71 against the US dollar, and that happened within about 7-8 months. The Aussie dollar was a similar story last year. What happened with this currency pair was that the Reserve Bank of Australia spent the majority of last year saying that, look, our currency is overvalued, our economy is going to face certain downside risk, we need a weaker currency. Now, they spent the majority of 2014 doing this, so most analysts, economists knew that there was potential for a decline, but it wasn't until September actually that the Aussie dollar fell from that 0.93 region, and within a couple of months it fell to 0.77. This year the trend's very much with the dollar, because there's increase in optimism that this will be the year that the Federal Reserve begin to raise US interest rates. And because of this, traders have rushed towards the dollar this year. So there's always a different trend and an opportunity in the market. So but basically the best insight that I would provide would be that there's no need to rush.
No need to rush. This is very interesting because many are saying or address the trader. By the time we are using the word trader, people always associate people who are trying to gain profit or benefit by having this kind of a short-term plan in the market. Even some of them could be seen or addressed as the speculative as well. Is it really right, Jameel, that traders sometimes can be very emotional? Even though you're suggesting you don't have to be rushed into things, but traders, most of them are emotional. What is your comment on this?
Actually, this is a good point. I think that when traders do make mistakes or when they lose money, it's actually because they're not making informed decisions based on educating themselves.
Again, information is above all.
Yeah, they have to be informed decisions. They have to be educated about what's happening in the markets. And traders that do rush in and basically think on emotion, there is data to show that they run the risk of losing their investments.
Very good start. We still have another session to discuss more about this. And make sure you are with us on Economic Buzz. We are now discussing about global economic analysis with Forextime.